Well, hello and welcome and welcome and hello. My name is Danny Deals. Thank you for tuning in to Un Poco Mas, the show where we give you just a little bit more. It is Friday, October 6th, 2023, Toper time check. Topolinsky special 9:41 a.m. out here in beautiful Los Angeles. It's just before 1 p.m. out in NYC. Hope it's a great day wherever you are. Guys, we're heading into the weekend. We've got 3 weeks until the earnings report comes out. I told you Wednesday. Um, I bought SoFi at $7.20. I said it's going to make you know, quick move up for the next 30 days. That's what the chart was telling me. And lo and behold, I was right so far. Been wrong a lot lately because I always say the stock's going to go up. I'm always bullish. I try to be realistic and nuanced about it, but I'm just very bullish on the SoFi stock. I just can't help myself. Guys, today is quite a day. All the indexes are up, particularly the NASDAQ is up 150 points or just over 1%. SoFi stock is up 30 cents on the day or almost 4% to $7.95. No even sell off at open. Guys, the algo is not really working today too hard. One of the ways you can see that is these volume indicators, these little sort of candles on the bottom of the chart that tell you how much volume is in any given time interval. Um, a lot of times when the algo is just really in control of the stock, that looks like a shallow bowl where you see all this volume at open, it subsides after the first hour, and then these are just absolutely uniform all day. And then again, there's some variance at the end of the day as the market makers jockey for position. But basically, the algo is just countering whatever retail traders are actually doing. So there's just that's absolutely flat. What we're seeing now is the algos are letting go. There's a lot more real trading going on, I believe, and they're even listed like hedge funds, retirement funds are coming into the stock. Shorts have not really started to cover. I think the shorts have gone from smart shorts who were short long to dumb shorts who are just kind of late to the party, and there's sort of that mentality that it's a meme stock, a SPAC, a joke. SoFi is none of those things. SoFi is a very real company, showing rapid growth and very rapid increase in EBITDA, which is going to translate as they scale, as they grow, into rapid gains in actual net cash flow, cash profits, net gap profitability, which management keeps telling us is coming in Q4. One of the things you'll note about that, they have not equivocated on that profitability in Q4. Usually, SoFi is very conservative. They leave wiggle room. They're very conservative with their numbers, but consistently now for some time, for the last several quarters, Noto and Lapointe have been adamant that they're going to make that gap net profit in Q4. So if that doesn't happen, guys, that's going to be a big problem for the stock. But I think that's another reason the stock is going to go up into this earnings report. Basically, I told you guys, like, this thing trades sideways for 3.5 months. It goes into this little pattern that we see here circled in blue, see here circled in blue. Um, and then it goes up for 30 days. Like, that's just what I saw last time on the chart. I'm seeing basically the same thing this time on the chart. People will get a little confused coming into the last earnings report, but if you look here, guys, middle of June, the stock was really sitting at $9.50, exactly pegged where the algo had it at pre-ER. So right here and right here, exact same level, like precisely $9.55. You go over here before the last ER, $6.25, but whoops, that's not what I meant to move. What do you see? The thing just traded sideways. It trades sideways, slightly up before the ER, then it falls off a cliff. This last ER, all they did was just mixed in a pump and dump. Like this huge 210 million share day, and then 90 million the next day, and then of course the bottom just drops out, and it's a huge bull trap and all that thing, bull trap, bull crap. But we see this repeat. So guys, 625 coming into the last ER, 950 coming into this past ER. We saw incredible membership and deposit growth. I really just think a lot of shorts are going to want to be covering in these next 3 weeks. It's going to lead to upward pressure on the SoFi stock. I actually predict we're going to be at least at 950. The day before the earnings report that Friday. I just don't think it makes any sense that this stock is under $10. Of course, Bank of America. Let's look at the daily real quick, just for no reason. Looking very, very strong. Again, volume is not extremely uniform. There's actual, you can see when the algo kicks in and holds it at a certain level, but the accumulation is there, guys. I mean, people are buying the stock. There's just no two ways about it. They're not a lot of shorts covering, so people are buying the stock. If you look at the live short interest, just not a huge change. About 500,000 shares returned so far on the day, but cost to borrow max is again up at that 8.6 level. It does that quite often. You see free float on loan percent has come down from almost 13 to like 12 and a half, but the free float on loan is way up. Shares on loan are way up last 7 days, 10 million increase, and utilization way up 12% increase. So the actual estimated short interest percent of free float can be a little bit confusing or misleading because the way they control the price is volume and borrowing. The estimated short interest of free float are just is kind of more a function of which hedge funds are short long and hold their own shares with which to cover, and others that have to borrow shares. They're going, you're not supposed to be able to be naked short. It's kind of illegal, I think, but I think it's done. But anyway, so I think the number to watch is that free float on loan, shares on loan, because that's telling you how they're pushing the price action, and those are up huge over the last 7 days, and utilization is way up, and cost to borrow has spiked a few times. If you look at options, there was almost nothing open Wednesday. Now they've opened up a bunch of options at 8, and those are way up. But I don't know if that makes a lot of sense because it is Friday, and to make those options pay, you got to get to at least like 808 or 810 just to kind of break even or make a penny on them. So I just, I think again that's a lot of excited retail investors were looking for Friday, but this just could be hedging. I don't know. I'm not able to actually discern. I'm sure people smarter than me in the comments could say what exactly does it mean when these options are opened on a Friday really quick or a Thursday versus when they're opened earlier in the week. I know probably one would lean more toward institutional investors, one would lean more toward retail investors just being exuberant. But I'm not trading options. I just basically do covered calls on different stocks in my portfolio, but I'm not like an aggressive weekly options trader. That is not my deal. Anyway, guys, want to look at a couple of different articles that are out on the SoFi stock. Some exciting news coming out. Basically, with the chart, again, I think we're moving up. I don't know what it's going to be day by day. It's just impossible to predict, but I think we're moving up to that, 950 level. My computer seems to be frozen, does not want to click over to this next section. Not sure what's going on here. Okay, yeah. Tomorrow sports. We talked about this a little bit, but the reason I wanted to get into this was Steve Fiorio, who you guys know from SoFi Weekly and some of his YouTube content. He's also an author here on Seeking Alpha. He writes really good articles on SoFi every month or sometimes every couple of weeks. But he has an article out on the partnership we talked about with Tomorrow Sports, which kind of puts them in bed with the PGA Tour. And just this is extremely exciting, and he notes it's a lot bigger than people might sort of see at first blush. And of course, he has undergraduate degree in econ. Steve also has an MBA, but he also, of course, has a degree in golf facility management, and he managed country clubs and different things. So he has extensive knowledge about the golf industry, and that's why I highly encourage you to read this article. Like Stephen Fiorio, when he talks about stuff, he really knows what he's talking about, and he has the numbers And he's not just like a lot of people, you know, not, who just kind of talk out their ass. Like he really has a grasp of numbers. MBA, it's like I just really like his articles because he doesn't bullshit his way through. You just get a lot of numbers and data and insight. So he's looking at the impact of SoFi Stadium, why it's a great idea to go after golf. And I just, again, I'm not going to read the whole article, but I highly encourage you to go over to Seeking Alpha and read it. I do pay for Seeking Alpha. I don't get any type of, anything for you to go there. I pay full price for the site myself because I believe they have good authors, and I like to read the articles, and I don't like to try to like get around the paywall and all that stuff. If I find value in something, I don't mind paying for it. So anyway, he's talking about putting golf into perspective. Out basically a third of the U.S. population over the age of 5 consumed golf content or played golf or watched it on TV or something in the year. So that's 120 million people. And American age 6 and up who played golf on the off the golf course was over 41 million. 3.3 million people who played golf for the first time just in 2022. Um, so it's a very important statistic because SoFi is going after Gen Z, 18 to 34. Gen Z's incomes are increasing. Junior golf segment is increasing rapidly. By the end of 2022, there were 16,000 golf courses, more than Starbucks, more than McDonald's. Um, Locations in the United States. So that's pretty extraordinary. You just don't realize golf is quite as big as it is because, unless you watch it on TV or you're actively a golfer, it might be a little bit, foreign and sort of seem a little bit far off. And you think, oh, it's just a country club, just for rich people. But it's not. It's certainly there's people with disposable income and time. It's not a cheap sport, but a lot more people play and consume golf than we realize. So golf is perfect for SoFi, targeting 18 to 34-year-olds. And from 2006 to the end of 2022, the number of juniors playing increased by 36%. And then he goes into what this is actually going to be. SoFi Center, Palm Beach State College campus, 250,000 square foot, will accommodate 2,000 people. Talking about Tiger Woods, Rory McIlroy, John Ram, Justin Rose, Adam Scott, Ricky Fowler. These are the most popular people in golf, guys. Some of them are a little bit older now. There's like younger people coming on, but these are the people everybody knows, everybody wants to see. And then there's all kinds of big names behind this, you know, 4 of the 6 teams. So it's going to be like a team format by city, which is really cool. We've never seen that in golf. We've seen like, Europe versus America and all that stuff, the traditional, tournaments. But we haven't seen, this like type of league where it's like city by city. So Atlanta is led by Arthur M. Blank, AM AMB Sports, the owner of the Atlanta Falcons, PGA Tour Superstores, so that's in there. And then the Boston group is led by the people who own the Boston Red Sox, Pittsburgh Penguins, Los Angeles. This is extremely exciting. Of course, so we have SoFi Stadium out here. But the Los Angeles Golf Club is led by Alexis Ohanian. I'm not sure who that is, but then Serena Williams, Venus Williams, as well as limited partners, the Antetokounmpo brothers, Alex Morgan, Servando Carrasco, and Michelle Wee West. Michelle Wee, of course, is a legendary female golfer, which is great. The Williams sisters, huge names. Alex Morgan, soccer star. So those are huge sports stars, huge names, and SoFi is getting shine off of that. They're talking about how long you play golf. It takes an extreme amount of time, so you're very receptive to like advertising, messaging. It's just the ideal place to reach somebody. They're focused, they're alone, they have time, they're waiting. It's like, SoFi is just getting in there. This could be huge for SoFi from a brand awareness perspective, and it's going to become a media powerhouse. If you look at SoFi's membership growth, talking about the integral role that the stadium has played, and Noto talked about how important this is, how they reach, 20 million viewers per primetime football game. They had the Super Bowl. Look at the membership growth. 1 million members in Q1 2020 to 6.2 million just 3 years later. In Q2 2022, they had 2.7 billion in bank deposits. 1 year later in Q2 23, that's 12.7, so $10 billion increase in 1 year. It's just extraordinary, guys. It's fucking beautiful. When I think about it, fucking America, SoFi, just brings a tear to my eye. God, oh, Anthony Noto. God bless you, sir. God bless you. The United States Golf Association, USGA, kid friendly, trying to grow. They're talking about Gen Z, how that's SoFi's demographic. Gen Z is about to take over the economy. According to Bank of America, Gen Z's income will reach 33 trillion and surpass millennials by 2031. And SoFi is just going to own that market, guys. They're just going to own it. They're just going to lock it up. So, dude, give me one of those Tiger Woods fist bumps, guys. Give me just a low fist bump, like you're trying to unclog a drain, if you know what I mean. Pew Research Center, again, they just go in Gen Z, how important Gen Z is going to be to the future and how SoFi is targeting those high earners, graduate degrees within that demographic. So, Steve recently increased his position by 2%, plans to add more before earnings. He doesn't know about the short term, but long term, he's talking about profitability. And he's talking about SoFi is going to become a top 10 financial institution by market cap, which is Anthony Noto's goal. He believes SoFi will finish strong. Um, and we're back. So just wanted to conclude, he's talking about SoFi will finish strong 2023, and next year is going to be a transformational year for the business. Completely agree with that. Then you get the disclosures that he does have you know, beneficial long position shares of SoFi, Bank of America, other options derivatives. And he wrote this article himself, blah, blah, blah. And then there's another article again. I do recommend Seeking Alpha. It doesn't get me anything, but they have a free trial if you guys want to go over and check it out. But another article, October 4th, from Livy Investment Research. Not really familiar with this author, but it's a good article. Differentiated business model, and they go through sort of the risks. This kind of gives you a little bit of an insight into the bear case, but why this particular author believes the flywheel model is going to protect SoFi from sort of a lot of that downside systemic risk, why their bank charter is so critical to that, why the flywheel advantage is so critical to that, because SoFi is not an all or nothing thing. I know it seems like these personal loans are all they're going to do, but that's absolutely not going to be forever. And all three of their business segments are going to be making money by Q4. Yes, personal loans are still going to be the major driver of the balance sheet, but the key behind that is bringing in deposits. The deposit growth funds the personal loans. They're talking about the fact that getting the bank charter lowered the basically lowered their cost of capital by 216 basis points versus a warehouse facility cost. I mean, that's huge, guys. That's going to really accelerate profitability, and we've heard a lot about that, and also we've heard about how they're making more money holding loans, some of the loans on the books. But last quarter they did sell loans above par value. A lot of demand for their loans. SoFi has the highest quality borrowers in the industry, and they're talking about how student loans are maybe not going to be as big a driver initially as expected, but will come in, will put people on the flywheel. And remember, guys, this invest, personal loans, credit cards, home loans, student loans. This doesn't count a lot of the smaller stuff they're starting to do, travel, insurance, just other products. And then we're going to get into business banking. We already just got into expansion of the buy now, pay later thing from Galileo, partnered with MasterCard, which is very exciting. It's going to allow businesses of all size to basically have a credit facility that is instant and secure, and banks can control themselves. So it's also I think it was Steve or this article. I read both. I've read so many articles. My mind is, I'm very tired, guys. I needed a little bit more sleep this morning, but c'est la vie, guys. Duty called. But in any case, it basically goes into the fact that there is a lot more than meets the eye, like coming down from the technology side. Like the technology side, I think, is the real. We know banking is going to grow. We know they're going to grow deposits. We know they're paying still too much for each customer, but the growth is there. And as we get these customers on the flywheel, we're going to reduce the cost of customer acquisition, increase products per customer, increase profits and revenues per customer, et cetera, et cetera. Everything's going to be hitting on all cylinders very, very soon. Of course, I would like to see them control the cost of member acquisition. I'd like to see a bit of a reduction in the stock-based compensation, start paying our employees with some actual money, some profits, not just diluting the stock. But guys, this is it's very bullish stuff when you start to look at the structure of SoFi, the business model, how they've been able to lower the cost of capital, and they're talking about just the spreads on these loans, guys. I mean, the money's costing them like 4%, and they're loaning it out up to 25%. It's like, dude, this business model, again, the banking side with lending, it's not rocket science. It just lets them get money very cheap and loan it out at much higher rates, and they make a huge profit on the spread. And they've been able to manage the risk and make it work thus far. Now, the big risk is, with all these personal loans out, interest rates going to stay high for some time. Will we see a lot of defaults? It's certainly possible, guys. I think SoFi is insulated, as this article tries to explain, but at the end of the day, if interest rates stay high for a long, long time, that is going to hit SoFi's customers. It's just not going to hit quite as hard as other financial institutions because SoFi has been so careful in terms of who they lend to, in terms of their reserve ratios, and they have a ton of capacity to make more loans. And I think with interest rates staying high, things getting tighter, people who do have higher incomes and better financial situations, they are going to look for those personal loans to lower those interest rates on the debts they are holding. My opinion, guys, next 3 weeks, stock is going to move up sharply. People are talking about the jobs report being bad in terms of it being too hot for inflation, but it is good. It shows the overall economy is still a lot stronger than maybe the Fed would like it to be, but let's face it, that's good for profit. It's good for stocks, but it may not be good for the long term macro outlook. Guys, that's the SoFi stock. Ticker symbol is SOFI. It is October 6, 2023. Topper time check is 10:03 a.m. out here in a beautiful, sunny Los Angeles, California. It's Un Poco Mas, the show where we give you just a little bit more. So far on the day, SoFi stock is up 32 cents or 4.15%, almost 16 million shares traded. Volume is moderate. Algo's taking a little bit of a break on the day, and we're seeing some good old-fashioned, real human and institutional accumulation. So you freaks and geeks, don't be afraid to buy a few shares. Don't just talk on the interwebs and with all of your stories, all your fish stories. Go ahead and buy 3 shares. Just buy 3 shares. It's 24 bucks. You got that. Don't get a couple of Starbucks this weekend. Don't rent any videos down at the Blockbuster. Just buy 3 shares of SoFi. That's all I'm asking, but I'm not giving you financial advice. I don't really care what you do. Um, buy SoFi, don't buy SoFi, buy something else, buy PayPal, buy Palantir. What the hell do I care, guys? I'm sticking with the SoFi stock I bought recently at $7.20. Added a little bit to my position. I'm already way too deep on the SoFi stock, but I love it. I'm looking for trouble, and I believe in Noto. I believe the growth will be there on this earnings report, and I believe the profit will be there on the next one. And I think, like I said, I think after they announce the profit, the stock will quickly move up over $13.75. Sort of next February, March type of time frame. And I believe institutions will come on into the stock with net profit, and the shorts will have to let go, and this thing will no longer be a ball of yarn to be played with by the shorts, the cats, and it'll be back into sort of being traded on the actual merits of the growth and the profits that the company is making, and also the prospects for the future. Another thing Fiorio talked about was he wants to see these requests for proposals, these RFPs, bearing some fruit with Gal. We might not see it this year, but definitely next year, guys. We got to see them landing some big accounts. They paid a ton of money for Technesis. I was watching Tanner from Future Investing talking about thinking, yeah, Galileo was a good, acquisition, but how he thought, we were overpaid, or SoFi had overpaid for Technesis. And I have to agree, because I think that's something that they could have probably built. I mean, they have a good inroads into Latin America. We just have to see if this bears fruit. We have to have faith in management, think they made these strategic decisions for the long term. I know Galileo is supposed to save like $70 million a year eventually for the company. So, they're playing the long game, guys. And if you're a long-term investor, I think management has earned, I think management has earned a certain degree of confidence and deference, but certainly always be on your guard, always be watching for chinks in the armor. But so far, so good. SoFi. Thanks for watching, guys. It's Un Poco Moss. I'm Danny Deals. You guys have a great weekend, and we'll talk to you turds just a bit later.